Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Namaskar, welcome to the latest episode of State of Economy, where we are going to discuss various high-frequency economic indicators which were made public during last 2 to 3 days. And to talk about all those things, we have with us Aditi Nayar, Chief Economist of ICRA. Welcome, Aditi.
Thank you, Shishir.
Aditi, my first question is about GST. We have seen that overall collection in terms of the gross collection, which grew by 10%. That's on Y basis. But if I go by the sequential one, that's a dip in the overall collection. How do you see that?
I think I would rather go by the YOY numbers because there is a lot of seasonality which is there in the monthly GST collections. And overall, if we look at the YTD growth, that is tracking around 10% for the first 5 months of this year, which is quite healthy. In terms of the monthly, why I'm saying that that's not a very good indicator is because typically the GST collections tend to really pick up in the month after every quarter ending month. So, for instance, the collections in the month of July represent activity which happened in the month of June, which was a quarter ending month. And typically, this is where we see the spikes. So, April, July, October, and January. And then the sequential dip after that is to be expected and therefore should not be a matter for concern.
Okay. Now, coming to the net collection of GST, we have seen very high refund, and the net collection is just 6.5% on Y basis. Is there anything where we need to go into deep, we need to do some deep dive into that?
On this matter, I think we need to wait for another month or two to see if the trend stabilizes or not. Typically, in different types of taxes, we do tend to find that sometimes refunds are a little bit lumpy and that throws off the trend for that particular month, but things normalize over the course of the quarter. So, my inference is that we need to wait about at least one more month to see how this pans out.
Okay. One more trend about the GST. Some states like Gujarat and Karnataka, Gujarat and Andhra Pradesh, we are seeing single-digit growth. In fact, especially I'm more concerned about the Gujarat number. So, do you think that there is some issue in terms of the state-wise collection?
State-wise collection can also differ, and here again, there can be even more concentration that we see in terms of certain months, and then things normalize over a longer period of time. Many factors could have affected growth in particular states in the month of July. This is really the month where the monsoon kicks off. So, I mean, activity in the month of July, which translates into GST collections in the month of August. We've had a very interesting year so far. We had elections in the first couple of months, then the formation of the government. We had a budget which was presented in July after the elections were over. The monsoon didn't start very evenly. It progressed well through South India, but across the Gangetic Plains, the monsoon took a very long time to catch up to normal. Subsequently, we've had heavier than normal rainfall, and in fact, right now, we have floods happening in certain states, including in Gujarat. So, overall, there has been a lot of unevenness and break from normal seasonality in terms of the impact of the elections on some sectors. And these are some of the factors that also had an impact on the GDP growth, for instance, in Q1, another very important data point that we got last week.
Okay. I will talk about GDP slightly later. I would just like to highlight the PMI manufacturing number. That number is lesser than the month of July. I mean, in August we have 57.7, if my memory is correct. And there is one particular line which has attracted my attention. That is the fierce competition had some impact on the number. How do you read this particular line?
For starters, the PMI number may have dipped as compared to last month, but it's still very, very high because 50 means that you're at par with the last month. A number above 57 means that things are still improving as compared to the last month. And ultimately, this is a perception indicator based on a survey done of a large number of companies where the weighting done for each respondent is equal. So it doesn't take into account the size of the respondent all respondents are treated equally, whether they're, a large conglomerate or they are a small SME. Now, my sense is that as far as FY25 is concerned, there are a lot of transient and technical factors which are affecting some of our data, as we discussed for GST as well. And in terms of competition, perhaps there are two, three ways of interpreting it. One is competition from imports. So there are many sectors where we find that because of the way that global supply demand is, and with the INR having been rather stable as compared to the USD over the last many quarters, uh, imports are extremely competitive. And that is one source of competition that some sectors are facing quite acutely. Other could be that, our demand is still uneven, and with supply being healthy, it could be competition to go after that, slightly choosy demand. But interestingly, again, going back to the GDP data, we had a pickup in the private final consumption expenditure growth in the Q1 data to a level which was definitely higher than what I was expecting, given the fact that the last two survey rounds of the urban consumer confidence data have shown a downtake. And the rural economy still seems to be emerging out of the lingering impact of last year's unfavorable monsoon.
Okay. Now going back to the GDP data, we have seen first quarter number at 6.7%, and it is lesser than what the RBI estimate was. That's 7.1%, which was revised earlier this month. So what is your sense on the coming quarter? I mean, that's the second quarter and the coming quarters, and on the overall rate of growth. I mean, that for the whole fiscal.
So to start with, we had a lower forecast for the GDP and the GVA than what came through in the numbers. And we were particularly surprised by the estimates which have been placed by the NSO for three sectors. One is construction, where, the contraction that we saw in government capex really didn't suggest that we'll get a double-digit construction growth. The second is public administration, defense, and other services. Here again, based particularly on the revenue expenditure growth of the government of India, we thought that we will end up with a lower figure, not a 9.5% growth. This was the third highest growth that we saw across the subsectors. And the third one was agriculture, where we thought that conditions were quite tepid, and we weren't expecting a 2% rise in the agricultural GVA growth number either. So that's my first observation, that because of these three sectors, we found that the first estimate of growth for Q1 that the NSO has placed was higher than what we were anticipating. My second set of observations are around the GDP and the GVA, which are two separate matrices. So the GVA growth accelerated from 6.3 to 6.8% between Q4 and Q1, whereas the GDP growth slowed down very sharply from 7.8% to 6.7%. So first of all, the question is, was this a slowdown or an acceleration, and what should we look at? And after many quarters, we had GDP growth being lower than GVA growth, which is also something which doesn't happen very often. Now, my sense is going ahead, the better gauge of forecasting the momentum for the Indian economy is the GVA. So we're starting out with this 6.8% GVA growth. And our sense is that we will get a temporary dip in Q2, particularly in some sectors where the base effect from last year's Q2 is very, very high. For instance, manufacturing GVA reported an expansion of 14.3% in Q2 of FY24. And on this very high base, we are expecting a more modest number in Q2 of FY25. And there are a few other sectors like that. And then what we expect is that we will have a back-ended pickup in the GVA and in the GDP growth in H2 as government capital expenditure really ramps up once the monsoon season is over. And also, we do expect that with higher than normal rainfall in the last several weeks, we should end up with a reasonably good Kharif harvest, and the healthier replenished reservoir levels should support a good Rabi harvest.
Okay. So you talked about the capital expenditure. Since we did not have much of the expenditure during the first quarter because of the election, now isn't a challenging task to go for 11.11 lakh crore for the entire fiscal. I mean, since more expenditure we can expect only after the monsoon, but the period will be slightly less.
You're quite right. I mean, this is certainly not going to be a cakewalk. The headroom left for capital expenditure in the last 8 months of the year, because we have data up till July, entails more than a 30% YOY growth over the same duration of FY24. And that is definitely a tough ask in a curtailed amount of time to be able to get this much expenditure booked. So my sense is we are possibly going to end up with a little bit of a shortfall on the capital expenditure side. Nevertheless, because the pace will pick up as compared to what we saw in the first 4 months of the year, we do think that this will be a factor that will support the overall GDP growth momentum.
Okay. It may be too early to talk about the fiscal deficit number per se, but if I go by the lesser capital expenditure, I'm just assuming that, do you believe that the 4.9%, the estimate which is for FY25, the final number may be lesser than that?
We can't rule that out right now. On the revenue side, we are looking at a pretty comfortable scenario. I'm not sure that we will end up with a net miss when we look at tax and non-tax and disinvestment. I think things will be reasonably evenly spread out. On the expenditure side, I certainly can't rule out some amount of miss on the capital expenditure side. So we're not expecting the fiscal deficit to be materially higher than what was pegged in the July budget.
Okay. Now, my final question, Aditi. Now, the next high frequency economic indicator is the retail inflation. And considering some of the food products may not giving a clearer picture, and we have also seen the core inflation has slightly gone up in the month of July. What is your take, or what is your estimate for August?
So the estimate we're working with for August is about 3.2%, because we think that looking at how the perishable prices have moved, that there will be a month-on-month decline in the overall food index for the CPI. You're quite right. Things are quite hazy. What will be the final impact of the monsoon on food grain output and prices? That is something that we'll know a little more clearly in about 5-6 weeks. And on the perishable side, hopefully, things will be relatively normal in a seasonal sense going out, and we won't have any other shocks. Although typically we do tend to, the shocks keep coming back as far as vegetable prices are concerned. So, that is something that needs to be monitored very carefully. On the core inflation side, we have a slightly different view that last year's benign core inflation trends were not a reflection of a slack in the domestic economy. They were a reflection of the fact that the WPI was in deflation, and that was getting passed through to lower output prices domestically. And this year, as we go back into a normal WPI inflation, we do expect that core inflation will also start creeping up. So, other point is that as far as services are concerned, which are non-tradable, a general scenario where it's a domestic demand-led growth, services prices will be under pressure. There will be stickiness as far as services inflation is concerned, and that is something that will also contribute to core inflation creeping up over the course of this year.
Okay, Aditi, thank you very much for talking to us.
Thank you.